clear goals we want all of us here to go to achieve at the end of the day, because that's very important, and that is why we organize this session. So just bear with me. So at the end of the day, we want each of us here to be able to identify some of the structural barriers to access to finance. At least we can walk away with some of these key ones. And also knowing very well that once we understand those key barriers, they will help us to be able to highlight some of the gender and youth-specific challenges and how that can feature in the design of our programs, our business investment programs, to be able to address them. And also, we expect that the learnings from here will help us to design programs practically so that we are able to address the barrier, particularly designing financing models that work for SMEs in the agricultural space. So with that, you are most welcome. I have the opportunity of welcoming very important gentlemen and ladies from the agribusiness ecosystem, not in any other order. I will start with introducing John. John is from, he would have the opportunity to introduce himself, but John, please take a seat. John works as the MD for Pangea. Pangea has become a household name in terms of financial advisory services in Ghana. I know they've worked with many SMEs across the space. I also invite a colleague of mine with MIDA, Eric. He would also introduce himself. He's been working with the small businesses and providing all the financial linkages. So, Eric, you are welcome. And he will share with us some of his rich experiences. We have a professor who is also an agribusiness, who is breaking barriers in terms of business development as a woman. So, Prof, you are welcome. And please take your seat. Last but not the least, yes, we have a gentleman from Vision Fund. Vision Fund is a household name in Ghana. They provide financing, microcredit to a lot of SMEs in Ghana. And please, you are welcome, George. Okay, so let me have a very quick conversation with them, and let me say that it's going to be a very interactive session, and we'll have a lot of opportunity to ask questions, contribute to the topic, and let's hear from you in terms of those specific challenges. Thanks, George.
A very good afternoon to everyone here. My name is Sanatu Mustafa Alidu, the founder and for now CEO for Demboni Farm Gates Company Limited. I'm also a lecturer at the University for Development Studies, Tamale. The Demboni Farm Gates is a company that produces seed. We also sell agri-input and all other crop protection services such as agrochemicals and all of that. We started in 2019, and then eventually we brought in the smallholder agro scheme. Now we have over 5,000 smallholder farmers working in about 10 districts and in over 50 communities. But every year the dynamics changes depending on the business model we bring in. And we do soybean, we do groundnut, we do cowpea, we do rice. We do all that we think we can do to get the services to farmers to get better yields. Thank you.
Thank you.
Okay. Good afternoon, everyone. It's a pleasure for me to sit here as a panelist. My name is Eric Akurugu, and I work for MIDA Group 2 project as the Senior Small Business and Financial Services Officer. MIDA is a Canadian international NGO that is implementing the greater rural opportunities for women, grow project. And because it is the second phase, we call it the Grow 2 project, covering 3 regions in northern Ghana. So we work in Upper West, we work in northern region, we work in the Savannah region as well. And so the target is to reach up to 40,000 smallholder women farmers, 50 agribusinesses, and 5,000 micro entrepreneurs within that enclave. And I'm happy to state that we have gone too far in terms of the number that have been brought on board the project and how many that have benefited. Thank you.
Thank you, Eric. Thanks. John?
My name is John Shikatano. I'm a partner at Pangea Africa. We're a team of 19 based in Ghana, Sierra Leone, Senegal, and Guinea that are transaction advisors, advisory services to enterprises, which are really our key partners. And one of our favorite is here, Catherine Krobo-Edusi. You heard from her this morning of Eden Tree, the founder of Eden Tree. So our work is basically working in partnership with enterprises, principally with the goal of helping them raise capital so that they can grow.
Thank you, and I'm your moderator. I'm Zakaria Isahaku. I work for MIDA as the Regional Business Value Creation Lead. As Eric indicated, MIDA is a Canadian International Development Organization. Our regional business unit is in Senegal, Dakar. We work across the globe, currently in over 21 countries. In Ghana, we have quite a number of programs. The Grow 2 in Tamale. We are also implementing one of the biggest Mastercard program, African Growth Fund. The head office is in Accra here, but we work across a number of countries in West Africa. So thank you for the opportunity to moderate in this session. And to start the discussions, I'm sure we've all eaten. We've just taken our lunch. And that tells us the importance of agriculture. Because agriculture, food is at the center of everything. Without food, our survival cannot be guaranteed. So food is very essential. But we've also noticed, very sadly, that financing the agricultural sector is not as lucrative or it's not as forthcoming as compared to other sectors. We are told that within West Africa or Africa, we have over $6 billion financing gap to be able to finance that agribusinesses like Demboni farms will need to be able to operationalize their activities. Yet, apart from the food that I just talked about, even if you look at job creation opportunities, agriculture provides the largest opportunity for job creation. And so the question is, why? Because if it is the area that gives us food, that creates enough job opportunities, why are we not channeling the resources to that sector? In the plenary session this morning, we talked about the general risk of financing within agriculture, within the financing system. But when it comes to agriculture, it's even compounded. It's even more difficult. And so we have a panel here who have the experience, who have seen it all, who will share with us. And I'm going to ask all of you the same question because you come from different backgrounds. What are the risk factors? Why is it that it's so difficult for people or investors to invest in the agricultural sector? And I'll start with John from Pangea to sharing your perspectives, your thoughts, your experiences in that area with the audience. Thank you.
Thank you. In the first panel this morning, Amalarte, the director of Impact Investing Ghana, talked about the need for a quality pipeline of enterprises. And we see this as the biggest obstacle to catalyzing more financing. There's been enormous initiative, innovation on the supply of capital, and that's a good thing. We need that innovation. But there hasn't been nearly enough on the development of quality pipeline. We talk about pipeline, but where is that pipeline? Is there a list somewhere of a pipeline? Is there, is the 24-hour economy developing a database of diverse enterprises, women-owned enterprises, climate-smart enterprises, large enterprises, small enterprises, medium-sized enterprises, so that each investor finds what they're looking for and the pipeline is documented, and each enterprise has their teaser, their pitch deck, their deal room. If we have that pipeline, I believe we will attract much more capital, and it is flowing to other places much more consistently than here to Ghana. We look at Kenya, we look at nearby in Nigeria and the flows of capital happening there. We can do much better in Ghana, but we need to develop that strong, diverse pipeline of companies, not just talk about a financing gap, not just talk about Ghana is open for business. You know, we hear that a lot. Come to Ghana, you'll see opportunities in cassava and maize and tomatoes even. No, we need to talk about businesses that are prepared, that have documentation, and I think if we do have that, and that's part of what we aim to do as Pangea, is develop a compelling pipeline so that when an investor, and I see RDF here in the room, a great innovative investor that's ready to deploy capital, they find what they're looking for and they can deploy capital and not have to spend a lot of time and effort looking for it because actors like us are able to ready those companies for investment.
Thank you. We hear you about the quality of documentations as part of the reasons why there's that perceived risk. Eric, over to you. From where you sit, working with SMEs across northern Ghana, what are some of these perceived risks that is not attracting investors into these areas?
Thank you so much, Dr. Zach, for that question. So I like your preamble about the fact that the agri sector contributes so much in terms of the Ghanaian economy and the sub-Saharan Africa and across the world. If you narrow it to the Ghana situation, you are talking about the SME sector employing 30% of the workforce in the country and contributing to GDP about 21%. And so it tells you that it is a very important sector. Now, when it comes to the flow of capital, flow of loans to this particular sector, the Bank of Ghana sector report tells us that only 3.4% of the entire aggregate portfolio is into the agriculture sector. And so if we agree that the agri sector really is an important subsector of the economy and contributes significantly to Ghana's development, what is it that is really the problem? And so we need to look at which ways can we really ensure that there's flow of capital to be able to expand and allow players within this industry to diversify the production and processes. And so the common thing that we hear about is the fact that, so this sector is a risky area, and risky because of how it is much more dependent on the natural factors to be able to produce. So you are looking at the rainfall, you are looking at exposures to, bushfires, and some other risk factors that it is much more exposed to, that funders or financial institutions look at it and say that, look, if we enter into or venture into this particular area, there's a likelihood that our money will not come back. So you're looking at it from the demand and supply side. Demand side in terms of from the actors within the agri space, and supply side in terms of the financial institutions. So from the supply side, you're looking at it that, so what are some of the products that we can develop that would be attractive to this subsector? Okay. And so it is very difficult to be able to see tailor-made products that are targeted at the agricultural sector. And it makes it difficult for the farmers to be able to fall into the common pool of financial products that we have within the system. because of the peculiar nature of the sector. You know, they are unable to also put their records very well in order for financial institutions to be able to study them and be convinced that this is a bankable kind of idea that they would want to do.
Yeah, thank you, Eric. Thank you. So listening to you, you've highlighted very clearly some of the natural risk that agriculture is exposed to, in addition to what John talked about in terms of the documentation. And it's true, agriculture is characterized, particularly in this part of the country, where a lot of the factors are not controlled by the producers, the processors, and everybody. So, well noted. Let me come to you, Prof. There are a lot of investors here. IDF is here, Open Capital, Pangaea is here. They consider you and your business, they consider your business as a high-risk area. Do you agree with them? And what are some of these risks that you think you have as an SME that perhaps serves as a disincentive to investors?
Thank you very much for the opportunity. And I think all has been said since morning, all the deliberations and discussions. But nevertheless, we would still look at the peculiarity within where we are coming from. In the morning, a lot was talked about stringent collateral requirements. Honestly, it's a very big challenge to agribusinesses. In fact, initially, I didn't know until I got into that space. So probably it is so because it's the financial institutions and investors usually have a one-size-fits-for-all, which shouldn't be so. For instance, I hope you can hear me. For instance, if you come to northern Ghana, most of the business, we know in Ghana about 85% of the businesses are SMEs. And 2 out of 3 businesses usually are women-led businesses, though at a very smaller level. So if you don't kind of have a flexible collateral system for us, it becomes difficult for us to access the financial support. For instance, coming from northern Ghana, if you ask me for a collateral, and knowing very well that where we are coming from, we have a lot of, at least 70% is polygamous marriages. Do you expect me to go and tell my husband to give his house documents to me to come to you to take the loan? No, it is not possible. There may be about 2 other women with children around, so I may not be able to have access to that. Not only that, there are other factors that might not give you the opportunity to have that collateral. And if you come to me and I said I have my tractor, or this is my warehouse, or this is my pickup, or my treasure, and you cannot consider that as a collateral to give me the facility, then it becomes a big challenge for me to expand the business and grow. Just like my colleagues also mentioned, in 2024, we had the highest drought hit, almost 2 to 3 months of drought in the north. And so most of the times, if you go looking for loan, they try to ask you, how long are you going to turn over and pay? Assuming we give you for a year, would you be able to start to pay? You find it difficult to answer because most of the agri space, we start the season between March, April. And we have only 1 season in northern Ghana. So if you give me, say, 1 million cedi, and you expect by October, when I should have even gone to the farmers to start recovery, because what we do at Dumbona is to support the smallholder farmers with input credits, and then recover in kind. I do seed because that is a specialized area which I was trained. But I also do aggregation as and when I have the capital. But for 7 years now in business, I haven't been able to get funding to really grow the business the way I want it to grow. So that is the biggest issue.
Yes, thanks, Prof, for sharing those insights with us. Very revealing. George, you manage one of the biggest credit fund in the country. Of course, I'm sure you also do your own analysis of some of these perceived risks Have you come across some of them, and how do you, maybe later on we'll talk about, but just share with us some of those risks that you've had to address alongside your investment. Thank you.
Thanks so much, and good afternoon to everyone. So, when we talk about perceived risk or actual risk in terms of in the agribusiness space, when it comes to agribusiness, often we realize that the unpredictability of the cash flows happens to be our challenge. So you'd want to finance a particular agribusiness company, but you are unable to tell what the projected cash flow would be in terms of how much you are going to realize from the business and be able to pay. In as much as you'd want to structure it well, taking into consideration the seasonality of these businesses, you are also being careful, because at the end of the day, and let me say, most of these businesses are also based on, the weather, and then also issues to with climate change and stuff like that. So it sometimes puts some amount of risk to their businesses. When we are able to try as much as possible, factor all this into our risk calculations.
Okay. I mean, I like your last point, to factor in those risks in our investment decision-making processes. Because we were told this morning, there's no single business without risk. And so, knowing that the agricultural sector certainly has some risk, it then requires that we put in mechanisms to be able to address those risks, right? I mean, but most often, if you compare to the other area, we still talk about more of the risks in the agricultural sector, as though there are risks that we cannot address. You have been doing this. You have been doing this investment over this period. In Grow 2, you have invested so much in the smallholder farmers and the agribusinesses. I mean, how do you address those risks?
Thanks for the question. So let me say it this way. So it is important that we look at the skills of these businesses. And so for us in Vision Fund, what we do is to look at the village savings groups, the savings groups.
Okay.
How are we able to bring the women and probably the youth into savings groups, into groups that makes it easy to avoid the challenges of collateral? Because if collateral is one of the challenges for them, coming together becomes easy, and because they would then be guaranteeing for each other.
Okay.
And so it makes it easy. It gives us also the comfort to be able to advance whatever amount of credit for them. So,
yeah, thanks for sharing that. I'll come to you, John.
And just to add, that also, it is also important because of the nature of the difficulty of predicting cash flows, because of the weather, to also factor in insurance, because it's very, very important.
Sure. Yeah, John, I'll come to you. Pangia, as a transaction advisor, working across the ecosystem, if you could share with us some of the financing models that have been designed, implemented, that are adequately addressing some of the risks that we've talked about within the space that you work in.
Sure, and I think it's good to talk about barriers, but it's also better to talk about successes, because successes can be replicated. And I think there are a number of successes, programs that are working. One of the big issues is size, and we talk about SMEs, but we're often really talking about medium-sized businesses, those that have revenues of a few $100,000 or more, and it's very hard to get those smaller deals done. But that's another topic. But let me talk about a few of the innovations that I see as very exciting and open to replication, and one of them is actually the MEDA Grow 2 activity, which I think is very promising because it's really taking advantage of development actors and their presence, their knowledge, their funding from Global Affairs Canada's place, and then leveraging that to bring private sector sustainable capital. You have the if what's that stand for? Investing in Yeah, there's an annual forum in Tamale that's a very good forum that brings together companies like Dimbone, Farmgate, and others, and brings together investors, and I know Angela from RDF was there, and perhaps some others in the room. So this is the kind of innovation where you're taking advantage of that presence, the funding, to ready companies, and working with partners like Pangea in the private sector that can also take that and bring it to the next level. The same is happening actually with Vision Fund and World Vision and Everyone Thrives, which is a similar NGO program, but it's bringing private sector access to markets, access to finance, taking advantage of their funding. They have very generous funding from a number of private donors, but then bringing sustainable financing to farmers so that they can eventually thrive and their incomes will increase. So these are some of the exciting things. Another one is Stanbic Bank. Now, many of you know about the Bridge and Agric program, funded by MasterCard Foundation. Well, Stanbic Bank has said, we need help with a pipeline of agri-SMEs. We've been given some funding from MasterCard to fund them, but we're not getting the pipeline we need. We don't have maybe that specialty. So they've also said, Pangea, could you help us? And they've hired us to help them with applicants to the Bridge and Agric program, which lends at 7% and can lend even for more than 1 year, and in theory has collateral requirements that are lower. Now, there are challenges definitely with the collateral for one, and I know we've been hearing that throughout the day, that collateral, it's one of the challenges, but there are solutions. We heard about the 24-hour economy saying that DBG is going to unlock a lot of guarantees so that SMEs will not have these collateral requirements. Well, some of that we need to see more in action than just talk, but surely these solutions are available, they're being deployed, and we can replicate them.
Yeah, thank you, John. And Eric, still staying on the same topic or question, because we talked about most of these risks, we are also exploring, and I'm sure our audience will want to learn on that. What are these models, financing models, that are able to take on, support SMEs to grow, whilst at the same time addressing the challenges that we've talked about? Are you able to share with us what the MEDA Grow 2 program is doing?
Okay, so as a facilitator, at the start of the project, when we did the sector study, we realized these challenges that we have already mentioned earlier in this discussion. So we came up with some funds to be able to work with our various clients to see how we can unlock and bring in the financial institutions to on-lend to this sector. And so we actually brought in 3 different funds, the Matching Award Fund, that is targeting the agribusinesses, and the Innovation Fund also, that seeks to support the smallholder women farmers at the last mile communities to be able to access funding and technology support, and then also the loan guarantee fund. And so if you're looking at the models, we actually, in the assessment with the financial institutions, saw that, look, if we want to leave it alone to the financial institutions to be able to on-lend to this sector, we will not be able to make that much impact. And so we looked at the kind of blended finance scheme. So with the matching award, we could have the SME contributing 50% or 40%, and then you have media also contributing a certain percentage. So it is actually 50% apart. But there are situations that the SME will not be able to contribute the entire 50%, and so they may contribute 30%, and then the other 20% will come from the financial institution to them as a loan. And we use the matching award to kind of unlock some other opportunities for them to be able to access technology and working capital as well. So we see the blended finance as something that is really working well. In our discussions and engagement with the financial institutions, we also realize the issue of not fully understanding the agricultural sector. And so one of the things that we did was to provide some level of technical assistance by way of training for them to even appreciate in terms of the type of products that they can develop that will meet the needs of these farmers. Remember, we said that one of the challenges that farmers face as a result, they are not able to access the funding support that is available within the space is because of the one-fit-all kind of financial products. And so we provided some technical assistance so that they can understand this sector very well and be able to tailor specific products that will go to the benefit of our clients within the project. And so we also brought on board some investors to do some matchmaking, pitching sessions that we have carried out just to be able to connect these businesses to the investor community. And one of the things that we did is to look at how do we promote the crowdfunding as a model that will allow these businesses to be able to access funding opportunities available in the system. Can we also pursue some kind of what we call the invoice financing and even value chain financing? These are models that we believe if we go into, we will be able to support them to be able to avoid the issue of the collateral requirements, the issue of the audited accounts, the issue of the financial statements, the issue of even operating and meeting the bank requirements in terms of the length of time that a business is supposed to open and operate an account. You go to the bank and they'll tell you that you need to open an account and operate it for at least 6 months before you even qualify, you know. But with some of these models that I have mentioned, we are able to really skip the hurdles and work with them to be able to acquire funding support within the shortest possible time.
Okay. Thank you, Eric. Thanks so much for sharing those thoughts with us. Prof, all the models that we've talked about should hover around what you do as a business. And I had this discussion with you before we came, and you indicated to me that for the past 2-3 years, you've been struggling to get in financing to be able to scale up your business. A whole professor, a breeder, and that alone should be able to give you that leverage to be able to get funding. And so if you are not getting, then the very ordinary woman with the SMEs will probably not even be able to start. That's the point. So what is missing? Why is it difficult for you to be able to access all of those funding we've talked about, the blended finance, the impact investors, financing, and all of that? What the challenge? I mean, what the issue? What has been your experience in terms of that process? Thank you.
Thank you very much. I don't know whether the tangent I'm going is going to fit your question, but I think it had nothing to do with my title. When we are in the business ground, we don't talk about titles. We leave that one when I get back to the university. Yeah. So I think that I don't know how to put it, but let me start by saying that I think in the Andy conference where I was sponsored by MIDA, I met an investor who asked me, so how much do you want? And at that time, I was green. I was just about 2 years into the business. So I said, oh, if I get some 500,000, he said, come on. But as I grew into the business, just about 3 years, about 5 years now, I applied 2 years ago to access this bridge in agriculture. I didn't need anybody to do that. I could go online and do that, but linked to a bank. And then I asked for the maximum ceiling of 10 million because I know I have apportioned it into what I need to invest it into. And I started chasing all the documents, bring this, bring that. Then the following year is this, bring collateral, and all that I have. My tractor, my treasures. In fact, thanks to MIDA Grow 2, who with the matching grant, I paid 60%, and then I was able to get a tractor and a plow. In fact, 2023, I got all my farms bent because of delay in getting tractor and a thresher to, process harvest. And so by 2024, when I got the matching grant and got the tractor, I was in the community for 3 weeks without lights. I was sleeping in there. But with that match, I was able to use 3 days to finish over 200 acres of land. And not only for that location, I have several locations. Because usually as a breeder, I do the foundation. I buy the breeder seed, do the foundation, then feed into my smallholder outgrowers to do the certified seed, and then we do the recovery. And so when I did the application, it's been off and on, bring this, bring that. Eventually, I gave up. Just when I was giving up, there was a rush for me to come for 1 million. I have grown past 1 million cedi. I have grown past it. So it is just that financial institutions, investors, should, because before you would give me that, you would have visited my facility, you would have visited my fields, you would have done all your due diligence. So if you have done all of this and you still feel that I still need that kind of stringent collateral to get the funding, then it becomes a big challenge for me. And you know, women, we fear risk. So if at a point in time you want to give me the funding, at a time when I cannot effectively utilize it, I better not take it. If I need to have it between February, March, and then you tell me that maybe I'll get it in June, July, I wouldn't need it. Because at that time, I need to procure fertilizer, I need to procure crop protection chemicals and things to support the farmers. I need to do training. I need to put the systems in order for the season to begin. So it is not because of but generally, women-led SMEs, I don't know, we really have a big challenge in getting the funding to support our
if
business.
MasterCard has come into the picture and even guarantee you under the brick, for example, where will you take how many years now?
I think I started the process in 2024.
Yeah. And you still not received the funding?
Yeah, I've been promised 1 million cedi for now. And even if I get that, that's okay. I can use it as a running capital for something. Because if I tell you the volumes of seed I have recovered, when I say I have 5,000 women smallholder farmers, it's not a joke. This year we got the regional, last year we got the regional best female award in Northern Ghana. And we are walking the talk there. We really are working. So the 1 million cedi is just something to support a portion of the business. And like I said, we only don't do the seed. We sell fertilizer, we sell other crop protection services. So if I get a 10 million, I'm going to put it into several other 10 over business, not just pushing all into the seed business. Okay. And it's still a challenge.
Prof. Thank you, Prof. I think it's interesting. Let's open it up. And if you agree with me, every table will have an opportunity to ask at least a question or share an experience. I've just been tapped that we have very limited time. So I want to, yes, I'll start from my right. Okay, please. Yeah.
Thank you very much. Okay, thank you very much. I think one problem I have identified is that a lot of SMEs start business by chance. We see that that's a problem and we can solve the problem. We don't have insight, forecast about anything. We don't know the language of business. I'm hearing SMEs, impact investing. I feel those languages are too huge in my head for someone who has just identified a problem and then I'm helping people solve that problem. I run a foodstuff business. I just connect buyers to sellers. So if you want to buy anything from the market, we go to the market, we buy it, and then we deliver to you. Now we want to scale up because we are getting about 10 orders per day. And I don't know how many staff to go for. I don't know how much to pay them at the end of the month. If I want to scale up and I want to get a shop so that I have everything in the shop, so we don't have to go to the market, that I don't have to give money to a staff member to go and shop. So if they run away, I don't know where to find them. So I'm afraid to open the business up to get more orders per day or to employ more people. If I go to the bank or I meet an investor or something and they are asking me questions and they are speaking the language I don't understand or I'm not familiar with, they are asking for 10% equity, this, and that, and I don't know what it is. And do I need to go back to school to learn? Which organization do I go to learn this language? Or can investors give us simple language that we can understand what they are trying to say, so we can also tell them, maybe I know what I want to do and how much I need, but I don't know how to put it in business language for you to tell me what you can give me. So if I speak in plain language, can you also speak in plain language so that I can know where to go to? If I need a mentor right now, or I need someone to direct me, that okay, if every month you are making 10,000 cedis, if you bring in 10 staff, it means you have to pay them maybe 3,000 or something. How do I do that calculation? Who do I go to? Where do I go to? We don't know that. So we keep finding ourselves in very small spaces, and even though we can grow, we don't know what to do to grow.
Thank you for asking that question very passionately. Please, John, just respond to her.
I'll give a short response, which is,
then we'll move to the next one.
you don't need to learn everything yourself. You need to find a good advisor who can help you. There's a whole network of advisors. There's the BASPAG, the Business Advisory Service Providers Association of Ghana. There's ANDI, Aspen Network of Development Entrepreneurs. There's Ghana Enterprise Agency. There's many resources available. You might not know, but do some research to find a good advisor, because no, you can't. If you buy a car, you don't have to learn how to repair the engine. You find a good mechanic who can help you repair the engine. And so for your business, find a good advisor. There are many advisors, law firms, communication firms, market research firms. Look into that, because you'll need a good partner. Now, how to pay for it is a challenging question, but I think there are innovations happening on that side. And part of the point that was made earlier today is we need to find innovative ways to finance those services so that it can be affordable to companies like yours.
Thank you, John. An opportunity to the next table. Please be very snappy, straight to the point. We have less than 5 minutes to wrap up.
Yeah.
Okay.
Thank you very much. And just to join in what had just been raised, I think like we have the Agric Extension officers who are experts and helping in the advising of farmers for free. There is also the need for us to find a space for this business advisory support, because we currently have a lot of young chartered accountants and young business entrepreneurs who are capable of giving advice, but like you rightly said, who is going to pay for their service? Some of them may want to even do it voluntarily and be given just a transportation. And there is the need for us to identify some source of pilots, maybe pilot it and roll it out to see how it works. Just like the extension officers, Agric extension officers are helping, I'm sure that we need some kind of investment in this, because all the investment needs to be managed. The bottom line is money, and people should be able to be trained to manage their own resources and other investments. Thank you.
Thank you. Okay, please.
Okay, so speaking as a rep of an organization that gives grants at some level to SMEs, and listening to, sorry, your name I missed, Baba speak earlier, I would want to clarify that sometimes it's not about the fact that the investor is not providing you the right support that you need at the time you need it, but it's about how difficult it is for you to convince the investor that this is what exactly you do. What I face on a daily basis is for someone to come and say, oh, I've been producing this and I want to scale up. But moving from there, like you were citing, I now want to do so below. So even if you support me, I will now have a so below factory. And that's a completely green area for you, and you haven't built any expertise in that area. So if you want funding from me to do something in that area, I'll be hesitant. But if you had told me I'm going to scale up in this, now I produce 2 bottles of this, I foresee that in the next 3 months, I can do 10 bottles. And with this type of expenditure and projections of revenue, I'll be able to bring in this much profit and all that. Then I would support you. So also there are accelerators out there that are specific to supporting you to build your skill in some of these areas that you lack, which you can look out for. And we are open to provide that support for.
Thank you, thank you. The next table, please be very brief, stay to the point, so that as many people as possible can speak.
All right, thank you. My name is Patrick, and I represent Enterprise Coast Ghana. It is well known that Techiman or Bono East happens to be one of the, food hotspots for Ghana. Most of the food that we produce are from Techiman. However, when you think of investment and capital, it is centered in only Accra. We find it very difficult for the organizations and small businesses within these hotspot areas to get access to funding. So what can we do to draw these organizations closer to people who really need it? Because Techiman happens to be the area where funding is, necessary for SMEs.
Okay.
So that's my question. How can we draw it closer to them?
Okay.
Thank you.
Thank you. Note down the question.
I'm Grace from Konya Farms. I think since we met, we've talking about investors, giving loans, giving grants. But I want to ask, as a farmer or as farmers, most of us want to scale up. But where is the market? Is the government prepared to mop up the excess when we scale up? Where does the excess goes? Or it's left on us to be able to push it out? You have a lot of rice getting rotten on the farms, and then we complain about imports. Who does that? Whose responsibility is it?
Thank you. Thank you. I think any other from the table? Okay. Yeah. Please give the mic to the last table. Yeah.
All right. Thank you. My name is Fred.
Okay, Fred.
I am from Farmer Global, an agribusiness organization. Well, for me, just 2 key contributions I want to make, maybe more like buttressing some of the point that has been made from my notes. And, generally, access to finance must become or must be a byproduct, and not the starting point. And I think I heard the risk associated with accessing finance, the collateral issue and all that. And one thing I noted from the conversation that went on is pretty much predictable cash flows and not necessarily fixed assets, because when it comes to smallholder farmers or even SMEs, and then you are going with fixed asset, then that is where the problem becomes. But if the financial institutions understand the terrain where these young people in particular work, and they can predict the cash flow in terms of the seasonality, I think that will really help to make them more bankable than the traditional way of going about it. The second thing I also noted, which I've also been involved in, is the aggregator model, where more like an anchor institution, like what Prof is doing, that manages the various, farmer groups and all that. That model have proven to be quite successful, to be honest, because then not many of the SMEs or smallholder farmers are formalized in terms of businesses. But if we have an institution like what Prof is managing, which is more of a formal entity, of course, with a level of exposure, it becomes easier for the financial institutions to relate and speak that common language. So these are the 2 things I think I want to buttress. And thank you.
Thank you. Yes, and thanks for all the contributions. In wrapping up, there have been discussions around issues that have policy implications. Access to market, the role of government, and all of that. That affects the agribusiness space. So whether you are an impact investor, whether you are the SME, all of that is impacted by the policy of government. So I want from all of you to share with us based on your experience, what policy change do we need within the sector so that either you are an investor, either you are the money farms, at least the policy will be favorable to what you do? I'll start from you.
Thank you very much. So, listening from from our audience, it's obvious that something needs to be done. First of all, I would want to recommend that if policy would have to be put in place, it should be more in the market. What can we do to bring inclusive? What can government do to bring out inclusive market systems? Because you see, currently as we speak, in the last year, for instance, we did
break the jargon. You know, she was talking about us using very big terminologies. Inclusive market. What do you mean?
Okay, so what I'm trying to say is that whatever is being produced on the farm or from individual agribusinesses must eventually land on the market. And it's through the market that the agribusiness owner would get the income to be able to repay whatever facility the person takes.
So what change, what policy change do you
So I recommend that government should rather put in policy to build up these market inclusive systems to ensure that at least in most of the communities, government can bring most of these aggregators together
to you, Prof.
To buy specific products. Yeah.
So markets, very, very important. Without markets, we cannot pay our loans.
We cannot pay the loans.
For 2 years now, we haven't been able to move the products out. And then anybody comes in with any price. Today, soybean is being sold at 450. The next day is 420. Meanwhile, if I support an acre of soybean production, about 1,000 Ghana cedi, and then I go in to mop up the seed.
Prof, you have made a point. Market is critical.
Thank you.
Eric, what policy change do you want to see?
I'm rather looking at what government should not do, right? And so we have agribusinesses, people that are in the industry providing inputs and all that. Why will government buy fertilizers and come and distribute? Why is it that the farmer is unable to buy from the market? Those are the issues that government should work on to address. But we hear about planting for food and jobs, where they buy fertilizers, come and distribute, and then there's also Feed Ghana, where they're thinking about distributing fertilizers and all that. These are things that have never worked too well for us. Why don't we rather incentivize the private sector and let them provide those services?
Thank you, Eric. John, you have the last bite.
I also won't talk about policy. Let's talk about what we can do today. Let's talk about the success stories that exist. Let's talk about Eden Tree, Mariseth Farms, Rudro Agritrade, Hat Agritech. These are companies that have raised capital. We can learn from them and follow their example.
Thank you so much. That's all that time will allow us because yes, the eagle is chasing us. But I want to thank all of you, first of all, for coming, listening. And I believe that we've all learned a lot. Yes, agribusinesses, it's challenging to work in the agribusiness space, but it's also rewarding if we do the things right and be able to provide the needed capital for them to be able to grow. So I want to thank all of you. You can continue to have the conversation with them beyond this. And let's keep the flame alive, because agriculture is the backbone of our economy. Thank you so much.